as I mentioned, strong revenue growth that came through, 13.3% to the good. You had a mixture of factors pushing your revenue lines higher, a combination of new restaurant openings, and also the fact that you launched the Spur Family Card, and that of course just showing that those loyalty programs in fact benefit companies that embark on this strategy.
Yeah, it's been a long time in the working. We recognized some years ago to give loyalty back to customers who frequent our business on a continuous basis was a real opportunity. And with the launch last year, October, we were quite astounded in terms of the results that have been achieved up to date. But definitely rewarding frequency is a revenue driver.
Let's touch on some of the performances of your businesses across the board. Spur steak ranches increasing turnover by 11%. Panarotti's Pizza, that was up by 5.3%. And then John Dory's a gain of 11.3%. And obviously the underperformer there is Panarotti's Pizza and Pasta. What contributed to the revenue lines only increasing there by 5.3%?
Well, in a sense, I think if you look at the pizza pasta market, it's a highly competitive industry in South Africa. You have a lot of players who play in that particular space. So in a sense, we are pretty chuffed with the growth that we did achieve, because it's a very, very competitive space to play.
Let's touch on the food prices and the fact that a lot of concern about food inflation coming to the fore. That essentially is going to be a negative for you. You're going to have to pass that on to the consumer at some point. What are you pricing in from a food inflation perspective, and what has your experience been over the last period?
Well, over the last 12 months or so, I think we've been very fortunate in the South African economy that food inflation for the first time in many, many years has been playing the game, in the sense that it hasn't got out of control. And we've been able to maintain prices at the same levels for approximately 12 months. But over the last few weeks, we've seen substantial changes coming through in terms of raw material product price. And of course, it's a challenge for us going forward at how we're going to manage this price and just not pass it on to the consumer. And one will have to manage this on a very careful basis, but it is a real challenge that we're facing in the next few months. We're more than likely programming a price increase at a low level now in April. But we are concerned with the go-forward prices in terms of what we've experienced over the last few weeks.
Well, Pierre, what kind of price increases can we expect? And perhaps you can take us back to when we did see a hyper food inflation that came through in the 2007-2008 period, and how you dealt with that as a business.
Well, in 2007 and 2008, we had 2 price increases a year in terms of our menu price increase, because we are highly sensitized to the fact in terms of what the affordability of the consumer is. In 2009, 2010, we only had 1 price increase, and as I said now, from 2010, 2011, we've had no price increase. But in those days, we were talking about anything between a 10 and 12% price increase. And under the current circumstances, one can't even envisage that type of increase coming through from a consumer perspective and a man in the street. At best, we will probably achieve maybe in the vicinity of a 5.5% price increase. But then again, it's a real challenge, because your real prices coming through are probably running at anything between 7 and 8% currently.
Let's move on to your international operations, because we saw revenue increasing there, but you did cite that adverse weather conditions affected overall consumer buying trends. That should now reverse, especially when you look at things since the beginning of the year.
Yes, I think December was a big blow to us in the UK, because as you will appreciate that we're situated in what I would call high retail developments, entertainment facilities as well. And the adverse weather conditions from about the 17th of December till the early part of January had a real detrimental effect on our revenue lines in the UK. We did see it rectify itself in the latter part of January, and especially into February. It's been a far more happier trading space, if I can call it that. So we don't foresee any problems in terms of our going forward to our year end of 30th of June. But it was very disappointing for us in terms of the UK, because we'd built up to kind of take advantage of that time. So it put us a little bit on the back foot, but the go forward in terms of January and February is looking good.
Well, tell us about the mix between the South African operations and your international operations, and which areas and geographies that you think could outperform going forward. We know that the troubles that the UK economy is facing right now, they're sitting at an inflation rate of around 4%. They had contraction numbers coming through on GDP fronts in the 4th quarter of last year as well. Just tell us about the mix there, and which areas you're most bullish about.
Well, I think, South Africa has always been, as we call it, the golden goose, and has been a dominant player in terms of our results and our market share and our profitability. We don't see that changing much over the next 2 to 3 years. Africa has always been, from a franchising point of view, has always been a great opportunity for us, and we see that adding on good value for us over the next 2 to 3 years. As far as the UK and our Australian markets are concerned, I think we're going in a consolidation phase. Australia is starting to look a little bit better for us now after many years of battle. As you rightfully pointed out, the UK economy is a real challenge within itself. Hence, in our release, we said we're not building any more restaurants in the second part of our 6 months. But again, we've got up to 11 restaurants there. They trade under the certain circumstances, they trade well. They hold their own. So I think from a development point of view and a growth point of view, there could be opportunity going forward. But again, we're a conservative bunch of guys, and we'll watch it very, very carefully. But your dominant player will always be our South African market and our growth in our South African revenue line.
And Pierre, looking at the overall restaurant expansion, because we have seen you increasing your restaurant base to 367 outlets, and you're planning to open up a new restaurant in Lolingwe in Malawi, and you're talking about other African sites being evaluated, and we know the South African and African consumer as a whole is perhaps in far better stead than what it was a few years ago, and it has been said and seen as the last frontier, especially when it comes to the African consumer. What are your prospects for the African continent? Because that comes with a set of challenges as well.
No, it does indeed. I think, I've been talking about Nigeria now for the last 2 to 3 years, but we've actually put a bit of concrete into the ground, so we're hopefully going to open there by November, but it's been 2 or 3 years. We've been busy in Lusaka now for 2 years. We're halfway built there as well. We trade well in the SADC countries. We've just opened in Swaziland. We're currently busy with developments in Mozambique and in Angola in terms of the next year to 2 years. Africa is a slow process, but it's a great opportunity, and I think you've just got to work hard at it, and you've got to kind of study it very, very carefully, obviously with local operators as well. But from a development point of view, over the next 2 to 3 years, the African and South African markets have still got opportunity for good growth.